So, good afternoon, everyone. Thank you for joining today's call. So, we are just starting our session today. So, we are going to talk about the e-invoicing. Before that, I'll just introduce about SNB Consulting and then about me. So, I'm Manish Saraf, partner with SNB Consulting, over 22 years of experience in the field of audit and tax advisory, previously associated with Deloitte and PricewaterhouseCoopers. And with me today, we have other speakers, Prakati, who has been into this international taxation and technology projects for over 12 years. She previously worked with PwC and been working on the UAE international taxation for last 1 year. And other speakers is Bhakti, who has worked in the e-invoicing, VAT, indirect taxation for last 10 years, previously been associated with Deloitte and helping in SNB on the VAT and on the e-invoicing assessment. And also we have our technology partner from Taxila, Mr. Praveen, who has been in this domain of technology services for last 25 years and over 10 years been working on the e-invoicing in the different jurisdiction. So, so what we are going to cover today is primarily, I mean, you might have been attending this session on the invoicing, but what primarily we are going to focus on the, yes, of course, bit on the framework structure, but what are those misconceptions which are there on the people's mind that we want to touch base so that you get some clarity from this session today. We'll talk about those data fields which are required depending upon the different business scenarios. We'll touch and discuss more on detail about the different transaction scenarios and what are those additional fields that would be required and how that has to be structured in the system. And then with respect to the five corner model, our technology partner, Mr. Praveen, going to talk about, he'll give a demo about that particular solution, which from the ASP perspective, how the data flow and integration will take place. And we will also talk about what is the readiness requirement, what the businesses need to do now to get ready and get into a smooth implementation phase of it. And some of the challenges which we see in overall in this transformation journey and what should be the possible way forward for you guys to implement on your businesses. Good. So as talking about the SNB Consulting, just to give introduction about SNB, SNB has been in UAE since 2018. We started with audit, tax practice, and transfer pricing, risk advisory, consulting services, which we have been doing, and we do a lot of technology transformation projects as well, and that's how we have picked up on the invoicing with our team who has experienced in the indirect taxation and VAT in this jurisdiction. And that's how we are working on the invoicing solution. And we have partnered with Taxila, who is one of the pre-approved by Ministry of Finance as an ASP. And they have been in this domain for last 10 years. And they previously been part of, they were founded in the USA and then been providing these services across 25 countries, which covers Saudi Arabia, Malaysia, Singapore, and other regions where PayPal system has been there. And as we talk about their journey, so they started since 2015, moving on to, and they have a delivery center in India and clients across different jurisdictions and the regions across. And they are registered with the PayPal system and, of course, part of the ASP in the UAE. So with this, I will now hand over Prakati to talk about the framework structure and then, yes, what are those myths which we have in our mind?
Thank you so much, Manish. And here we are to talk about the UAE invoicing right from the scratch, and also would take you through the implementation journey and what are the challenges and the solutions that we feel that has come up with us as a learning curve. Now, e-invoicing is something which is going to change the way the business is going to operate. How? It is based on the transactional level data. You're raising an invoice or raising a credit note in certain format. Some may be using a PDF, some may be using an Excel file, some may be using an OCR mechanism to do that. However, the e-invoicing is now going to standardize all this process, and there are a lot of features and factors to it which is enabling the standardization process. So it captures the electronic exchange happens through the pinned A data fields that are mentioned by the Ministry of Finance, along with the 16 use cases, which specifies various scenarios where a standardized invoices can be raised, where a commercial tax invoice, how it looks, what are the data fields it should have, what should a self invoice look like, what should a tax invoice or a credit note looks like. So all of these various categories of invoices are being taken care of, plotted into different 16 use cases, and data fields, which are more or less 50 for each of them, have been mentioned there. The important part about the UAE invoicing is that it is a mandatory requirement in the law. Now, there is a step of appointing a ASP, and many of them questions what does is the role of ASP. So, all the e-invoicing happens through a five corner model, which is a decentralized model adopted by the UAE Ministry of Finance. Just like a telecom operator that we use to use our mobile phones, there is a PayPal network, which is a pan European PayPal network, and all the invoicing going forward would be based on this network. Over and above that, there are accredited service provider who are already part or the member of PayPal network, and they are also being verified by the Ministry of Finance, getting rigorously tested for the data security, for the consistency, for whether they are capable enough to handle any uh, issues that happens while uh, in the operation of this five corner model, and hence all the invoicing goes through this model. Now, the mandate as of now is, as we understand, for business to business transactions and any invoices or credit note raised for business to government entities. Unlike in KSA, there are only two phases in which the implementation will happen. And the threshold for this is the revenue. More than 50 million revenue, you are in the first phase. Start implementation by 1st January 2027. Now, this we have less than a year to touch the e-invoicing mandatory date. There are certain countries like Singapore which start by soft implementation where it the government says that okay, you're voluntarily you can adopt e-invoicing. Here it is not. And there are subsequent and consequent penal implications if you do not raise or fulfill all the mandatory requirements. For all other businesses where the threshold is less than 50 million of revenue, 6 months down the line, 1st July 2027, you have to start the implementation. And before that, again, there is a due date, which is of ASP appointment. Now, for appointing ASP, you cannot just think and write down in your file of the company that this is the ASP that I feel like or I have appointed in my agreements or contract. This needs to be done on the Imaratex portal. So there is a place now where you need to appoint the ASP, you have to freeze it. The ASP have to approve it. So it's a bilateral thing. And only then you would be said to be complying with the requirement of appointment of ASP by the due date. There are so many criteria that a business might do to appoint the ASP. We will take you through that. But it's important that you understand your business, where you stand in terms of readiness, go about ASP appointment integration with the system or any other mechanism that is doable for your business, and be ready to be compliant with this mandate. Apart from this threshold requirement, there are also voluntarily and official pilot programs where either you will be called by the government that let's start on the pilot program. There are no penal implications there, it's a testing phase. The other is you choose yourself, you volunteer that I want to be part of this implementation, and you become capable through the ASP and start raising e invoices. Now, a lot of confusion happens in terms of what should be the definition of revenue. So, as per the ministerial decision 243, the revenue is defined as a gross income of a company based on the recent financial years as per the financial statements, which are in compliance with the audit and accounting requirement in the state. So, you don't have to worry about whether it is a B2C transaction or B2B for checking the revenue threshold. You have to go to your financial statement of the recent financial year, the accounting year, and check the requirement accordingly. For all other government bodies, the implementation will happen going forward from 1st October 2027. So basically, these are the timelines and the mandate. And all the businesses, whether they are VAT registered or not, are required to comply with the e invoicing mandate. A business may be doing any out of scope or below the threshold for the VAT regulations, they are still required to come into the net of e invoicing. There are only select few businesses which are also listed by in the ministerial decision that are excluded from the e invoicing mandate. A list of this is here. The government entities which are running in a sovereign capacity. There are three items for transportation business, primarily airline services for international passenger, where they are already issuing electronic ticket. Any ancillary airline services where they are using electronic miscellaneous documents (EMD) for and raising it to the passengers by the airline. Then comes the international transport of goods, where they are issuing an airway bill. These are the ones which are excluded only for the first 24 months, and going forward, they will again be into the net. Certain financial services which are either exempt or zero rated under the VAT law, those are excluded during this time. And any other transaction means ministry can include any other transaction or any other business to be part or out of scope of the e-invoicing mandate. So while there are a lot of knowledge sharing sessions happening around the town, there are still many misconceptions with regard to how the business is going to imbibe in e-invoicing. The very first question that we see across is that is this a replacement of the VAT law? So, VAT law will be there. There is no replacement. This is only a mechanism whereby, if right now you are sharing your invoices to your customer in any of the manner, you have to standardize yourself. For each of the businesses, there will be standardized field so that the recipient system can also understand it well. There will be a process so that it can be approved, and even if it is rejected, it cannot be an invoice cannot be cancelled. There has to be a credit note issued around that. So the VAT regulations which are there remains as is. The only things changes is the mechanism and the manner in which the invoices were raised. So, whether you are VAT registered or not, you're required to comply with the mandate based on the revenue threshold. It does not replaces the VAT. And even the companies which are free zone, or which, those are also required to comply with this. You cannot say that I am excluded because I'm free zone. No, those exemptions out of scope is not available here. Now, there will be certain businesses which are already using an ERP, and they say that my ERP is very strong to take care of invoicing. I'm already raising it. But what is the mandate here is that you're using the PayPal network to transmit those invoices as well. So the ASP is the one which will join hands with you. It will help you to validate, exchange, and transmit the invoices, takes it to the buyer's end, also takes the tax data to the federal tax authority, where they will have records of all your taxable items, whether it's 5%, 0%, how you are treating them. And they will be able to, eventually reconcile and pick audits from those records as well. Now, if ASP is going to do a lot of such things, whether it can take care of the VAT compliance as well, whether either the platform can take care of it. So it is not now a mandatory that ASP or the invoicing can help you automate the VAT return processes. It is still the same. The VAT return filing, again, the data or the reporting will help you to analyze the VAT return in a very more proper way. But the responsibility of VAT compliance still remains with the tax teams or the respective teams of the business, which are now. Again, the businesses, the requirement under the VAT law for retention of the invoices and the related documents remains same. The business needs to do that. Of course, ASP can help you in archiving of those information and details. And the main question, that VAT return will automatically be filled, as of now, no. Eventually, it may happen so. Now, there is a mandate that means it is compulsory to adopt e-invoicing. Now, the question is, I'm not in hurry. I want more ASPs to be listed. It is not just a work of an ASP individually to complete or bring you to a place where you are mandatorily set to be compliant with the e-invoicing. It is more of that you understand the business processes, what are the gaps vis-a-vis the mandates, where what are the data fields that you are not currently capturing in your invoices, where is the nomenclature of the company across various accounting systems is same or changed. There are so many nitty-gritties around that we have not seen once we have implemented VAT from 2018. For many businesses, things are going as is. It's a good time to review those things and, of course, comply with the e-invoicing. So it can again go hand in hand to understand your business processes and identifying the gaps in the ERP systems, meeting the mandate, and then raising invoices through an ASP. So these are the penal implications that has been listed as part of the Cabinet Decision 106 for violation of not meeting the mandatory requirements. It starts from not appointing the ASP on time to failure to issue or transmit a invoice on time. So there is, in terms of time, there is the VAT law specifies that the invoice has to be raised in 14 days of timeline. So all those things have to be met. Failure to issue a required credit note. Now, many business might not be issuing a credit note; they might be changing the invoice as such. This is called tampering with the invoice, which is not required. That's not as per the law. But going forward, once you raise an invoice, if you have to make a correction, cancel anything, you need to use a credit note for that. And if you don't use that feature, there is a penal implication for that. In case there is a system failure, the ASP or the business needs to inform the FTA that there is a system failure and I'm not able to issue invoices. And if there is a failure to notify the FTA within the timeline, again, there is a penal implication for that. And there is, in case of there is any change in the business data and that is not informed to the FTA, in that case as well, there are penal implications. So wherever you go, you have to be very streamlined, aligned with what the law says, and going anywhere haywire may lead to a penal implication. You may say it's not very hefty, the RTA fines might be more huger than this, but see, it is based on per invoice basis, and eventually, it also creates a poor image on the brand, on the business, when there is a lot of fines and penalties. So it's important to understand it well and comply accordingly. So I would uh, ask my colleague Bhakti to take it forward from here, to explain more about the data fields and the used cases.
Thank you, Prakriti. Let me just share my screen. I hope the screen is visible. Yeah. So now, thank you, Prakriti, for taking us through the e-invoicing framework. So now what I'll be discussing is the most important component of e-invoicing, which is the data field. So exactly what an invoice is required to capture so that the invoice gets validated through the ASP and then reaches the end customer or the FTA authorities. So to start with, what exactly are the data fields? Data fields are nothing but the data dictionary. So basically the invoice going forward from 1st Jan 2027, what invoice gets generated, the invoice is required to capture all these data fields. So if you see on the screen, there are 50 standardized fields which an invoice is required to capture. So these 50 fields were prescribed by the FTA in the consultation paper which was issued in Feb. So now, while we are awaiting for the final confirmation on exactly the final data fields which an invoice is required to capture, but more the final version should align to this draft data fields, and we can start working on configuring these data fields for the time being. So if you see on the screen, the 50 data fields what are plotted can be divided into 6 heads. First is the invoice details. So what exactly a invoice is required to capture. So that it will cover the invoice number, the invoice type code, the currency in which the invoice is being generated, the category of invoice, whether it's a B2B invoice, export invoice, RCM invoice, or the payment and the payment due date, that is whether it's to be paid within 30 days, 60 days, which generally is being captured in the existing invoices also. Then the second head is the seller details, wherein we'll capture all the details of the company supplying. So it will have the seller name, the seller tax identification number, the country, the address, etc. I would request everyone on call to be muted. Yes, thank you. Yes. So these are the seller details, and similar to seller details, we'll also have the buyer details, which is the buyer name, the buyer electronic address, the country, the TRN of the buyer if the buyer is registered, then the document details. So now, right now, there must be instances wherein we are capturing the entire invoice value at the end of the document. But going forward, it is required that line by line for every supply of good or supply of service, we have a line item of what is the amount, what is the tax rate applied, what is the total value post tax, and also if there are any adjustments of any discounts, etc., then we'll also have to capture that in the invoice. Then we have the tax breakdown, which will give what is the percentage of tax which is being charged, what is the tax code, what is the tax amount, etc. And the final one is the invoice line item, which is invoice line by line, what is the details, what I just explained, that is the unit of measurement, the quantity, the taxable value, then the rate of tax and the value after tax, plus the description of service or the good. So if you see on the sheet, there are 15 fields which are highlighted in red. These fields are those which were currently not being captured under the UAE invoice template, but going forward, as per the Pint AE format, these details are to be captured. If we see more, mainly the fields are around now going forward, we have to give more details to the authorities as to what is the type of the invoice. That is whether it's a B2B invoice or it's a B2G invoice or it's an export invoice or it's being generated under reverse charge mechanism as a self invoice. Then also every seller and every buyer who are registered under the UAE tax law, they will have a TR tax identification tax identifier. So every TRN will have a tax identifier number. So that identifier details will have to be captured on the invoice. This identifier details can be configured through the ASP, but we have to ensure that the final invoice captures these details. And in cases the buyers, the customers are not registered, then there'll be an additional requirement because they'll not have a tax identifier number. Will be required to obtain the trade license or the commercial license details as well. Then even currently, maybe we're not having line by line tax breakups in the invoice, but going forward under the e-invoicing regulation, it's mandatory that we have such breakup. Now we've discussed what are the 50 data fields which are required to be mandatorily captured in every invoice. But apart from this 50 data fields, if we see the Pint A, the details required under the consultation paper, they're not only 50, they are in total 85 to 90 fields which an invoice is required to include. So these fields can be divided into three buckets. So mainly they are mandatory fields, conditional mandatory fields, and optional fields. What exactly is mandatory fields is what we discussed, the 50 fields which an invoice is required to capture, which includes like the examples I just told, the invoice number, date, the seller buyer details, the amount in which the invoice is being generated, and the currency. Then if we move on, then there are mandatory fields, conditional mandatory fields. Conditional mandatory fields are those which would be required based on the type of the transaction. So for exports, there could be certain additional fields required. For reverse charge transactions, there could be certain additional fields. Or when you're raising the credit note, there could be one additional field that is linking the credit note to the original invoice. And these conditional mandatory fields would be dependent on the type of the invoice we are raising. So what is necessary now is we'll have to identify, every company will have to identify what are the set of transactions they are undertaking, and then identify what, apart from the mandatory fields, are the conditional mandatory fields which the invoice based on that category of transaction is required to capture. And the last one are the optional fields. These are optional fields which are good to be, it's good to have on the invoice. Basically, this is referring to your contract number or having any additional notes or remarks like the payment terms or the bank details or the branch code or the branch through which we are raising the invoice, or the PO references or any other fields which, in case you have any fields which you're currently also capturing in the invoice, we can going forward also capture this under the optional fields. So for the set of mandatory, conditional mandatory, and optional fields, some fields are those which are predefined by the ministry. That is, they are suppose now, for example, we take the invoice type. So the invoice type, the ministry has given 10 or 12 categories of invoicing, and every category is linked to a code. So if you see below on the screen, we've plotted the example. Suppose if you see code 388, that stands for a tax invoice. So what we will have to do is we'll have to configure in our system whenever a tax invoice is being raised that's linked to this invoice type, invoice code, which is predefined, that is 388. So the e-invoicing in the e-invoicing portal and the ASP automatically knows what type of document is being generated. Similarly, so there are around 20 or 23 data fields which are predefined lookup fields. So for those fields from the set of predefined regulations which the ministry has given, we'll have to capture the details. So we have plotted a few examples on the screen here for VAT category, payment needs, country codes. But as and when we do the assessment, we'll know what are the other lookup fields which will be required based on the transaction category. So what has to be done now is we have to start comparing our existing data fields with the new data fields, and also in cases where it's a predefined lookup value, configure our SAPs to include that list so that tomorrow when an invoice is being generated, all these fields are already there in the system. Then only it will meet the validation and run to the customer and the FTA authorities. So this is about the data fields. Now, like we discussed in the conditional category, there are certain transactions for which the FTA defines there are certain additional data fields which are required apart from the mandatory data fields. So, yeah. So the FTA has for now prescribed 16 such transaction categories for which e-invoicing is required to be generated. And based on the type of category, there would be certain conditional mandatory fields along with the mandatory fields which would be required to be captured on the invoice. So the 16 use cases mainly are: first, if you're into the general B2B and B2G transactions, wherein you have the standard 50 data fields, then it is the reverse charge mechanism, wherein the cross-border transactions or the reverse charge on the scrap dealers or the oil and gas sector, where you're currently raising self-invoices. Going forward, that will also be raised through e-invoicing. Then we have zero-rated supplies, which includes the healthcare services or the banking services which are currently zero rated, or the real estate sector. So for that also an e-invoice will be required to be generated. Then we have deemed supply, then the standard credit note, summary invoice, continuous supply, free trade zone supply. And specific categories basically are the supplies through e-commerce operators or exports or agent through billings and the profit margin scheme. So based, what we have to do is we have to identify the existing, or from the set of 16 transactions prescribed, what are the operations which we and the company are undertaking. And then based on the type of the use case, we'll have to start mapping the data fields. So for example, we have just plotted here the scenarios, what would be before and after the e-invoicing regime. So now if we see the use case one, which is the standard tax invoice, before, after, every invoice had a specific template and specific data fields which were being captured, and invoice were either being supplied to the customer as a PDF or an Excel based on the type of ERP. Going forward, what will happen is all the mandatory 50 data fields are required to be captured in the invoice. Then the electronic addresses, that is the e-invoice ID of both the buyer and the seller, is to be captured. Then the payment means codes, that is the mode of payment, whether it is going to be through cash or a credit card or a bank transfer. That code, which is a predefined data list, will have to be plotted. And then the invoice compulsorily has to run through an XML format to the ASP. And then further, the delivery to the customer can be done in PDF, but the invoice from the ERP to the ASP will be done through an XML format. And then the specific identifiers code which the FTA gives to every e-invoicing ID. Then we have the exports. Exports, currently we used to raise a general export invoice, and separately we used to maintain the shipping documents. But going forward in e-invoicing, the shipping document references will also have to be plotted on the invoice, and the delivery address, what is the final destination where the goods or the services are being delivered, along with the country code from the predefined data list, is to be captured. Similarly, in case of reverse charge mechanism, earlier we had seen instances wherein certain companies were generating invoices under the self-billing mechanism and some companies were not billing it. But going forward under the e-invoicing, it would be mandatory that a reverse charge self-billing document also is generated, and the invoice specifically captures that this invoice is being generated under reverse charge mechanism. What is the type of the good or services which is being generated? And in case it's an instance where the buyer is a registered person, then the TRN of the buyer will also be required to be captured. Then if we see the case of credit note, currently the credit notes are being generated to adjust the price or return the good offer discounts, post sale discounts. The credit notes, while in the law also it is currently required that the credit note provides a reference to the original invoice number, but we have seen instances wherein that's left blank or that's not being captured. Going forward, if that field is not being captured, then the invoice will not be validated through the ASP and then will not run through to your customer or the FTA. So that will become one of the mandatory fields Plus, also we'll have to provide a reference of what was the original e-invoicing ID of the invoice against which this credit note is being generated. In case of commercial invoicing, so the instances what we have discussed till now, all of them were previously covered under the e-invoice, under the VAT law previously. But commercial invoicing is something we were generating invoicing which is not covered under the VAT provisions, but they will still be covered under the e-invoicing provision. So there were no standard template of what all fields were being captured in a commercial invoice, but now there is a mandatory standard template provided which has the 49 data fields which are required to be captured in a commercial invoice. And that invoice will also be sent in an XML format to the ASP for validation. And that template will also be required to capture all the data fields. Additionally, the commercial invoice will also be required to capture the trade license or the commercial license details of the buyer. So this is one field. Maybe currently, as per the KYC processes, we may or may not be collecting such information from our customers. But going forward, we have to ensure we have this information being collected, because that reference of the ID number is to be given on the invoice. Lastly, for deemed supply invoices, earlier we had seen, before the e-invoicing regime, that is today, we see that people are generating these documents either through passing of a JV or through an internal accounting adjustment entry or just a commercial document. There was no actual invoice that was being generated for the deemed supply invoicing. Going forward, we'll have to ensure that the valuation of the deemed supply is properly being substantiated under the UAE VAT law. The invoice clearly is being generated with a reference to the deemed supply, the reason why it gets covered under the deemed supply, and also the other mandatory data fields specified are being captured. So this is basically what the data fields and use cases of e-invoicing, and this is what has to be done now, because for one to be ready on 1st Jan 2027, the first step what is to be undertaken today is mapping of this data fields. So what would be a process, the action plan today? First would be you compare your existing data fields to the 50 mandatory data fields, and also identify what are the use case scenarios which you fall into. So you know what are the additional conditional mandatory fields which will apply. Compare those sheets to the e-invoicing norm, and then the whatever gaps are identified, we have to start collating that information from our customers and update that in our ERP system. Then configure our ERP system to include all those additional data fields. Currently, maybe the ERP system, the invoice template in the ERP system is capturing only 20 to 25 data fields from those required 50 data fields. So we have to start configuring the additional 25 data fields into the ERP, so that then once we receive the information from a customers, we can plot those data fields into our ERP. Then also one step which is critical is we'll have to start taking a declaration from our customers and vendors whether the revenue is above the threshold limit of 50 million or not. Because the e-invoicing is the plan is that the e-invoicing will be implemented in a phased manner. So the first phase includes only the companies or the entities whose revenue is above 50 million threshold limit. So in cases if our customers or buyers are below the threshold limit, they would not be under the e-invoicing regime today. So we'll have to obtain a declaration from them that their turnover does not cross the threshold limit, and hence that's why they'll not be generating e-invoicing. And in case when, and also include the clause that whenever you close it, please let us know. So we configure our ERP accordingly to generate e-invoicing to them. And the last, once all the data fields, the invoice features are configured into the system, then the company will have to select the ASP by 31st July 2026. And then once the ASP is selected, then the system will have to be configured to the ASP system, and then test runs, pilot testing, all will go on for another 6 months. And finally on 1st Jan 2027, we'll be ready to go live and generate e-invoicing under the new Pint AE formats. Now we'll take you through what is the 5-corner invoicing model which is proposed to be implemented under the UAE invoicing framework. My colleague Mr. Praveen will take that over. Over to you, Mr. Praveen.
Thank you, Bhakti, for this introduction. So let me share my screen. Hope you can see my screen.
Yes.
So, maybe you know about this five-corner model. You have heard in many of the things. I will not go into a deep of explaining all these things. I will give you more advanced functionality what SNB as a company we can offer to you. Okay, so as you know that you are basically have to select the ASP and a tax invoice, credit note, all the document types, what Bhakti told, you can exchange with the corner 5 and corner 3. But along with that, there are certain cases where you want to share some additional document or supporting document. For example, you wanted to share a dispatch advice or some calculation in an Excel sheet, some PDF copy, or some diagram in a JPG file. Now, all that can be shared along with this. So, how it happens, you can directly send this additional document to SNB as a ASP corner 2, and from here only tax invoice is getting reported to the corner 5, and the buyer receiving access point we can share the additional document, and then buyer ASP can share with the buyer. So in this way you don't need to share additional emails for all the supporting document to the buyer. Okay. Second, when we talk about the cross-border transactions, in cross-border transactions, generally what happens if you are doing export, okay, if you are doing export to the non PEPAL country like Saudi, India, Jordan, Philippines, or any Asian country where non-PEPAL e-invoicing is rolled out, in that scenario, here you will send the data to corner 2, and then corner 2 will only push it to the corner 5. After that, he will inform seller that please send a PDF copy to your buyer because buyer country is not under a PEPAL. But consider if you are doing the export to the country where PEPAL is there, like Oman, which is coming, Malaysia, Singapore, or any Europe country where PEPAL is there. So how this transaction will happen? Consider you are doing export in Singapore. Now, in this case, when you send this data to the corner to ASP, SNB will validate the data. After that, he will come to know this data I had to share it with the Singapore. Okay. From the SML, we will come to know your buyer authorized service provider in Singapore. Okay. Now, UAE format is called Pint A XML format. Okay. Similarly, in Singapore, it's called Pint SG XML format. So I have to first send this Pint AE XML to FTA because FTA will only accept AE format. But for a Singapore, I had to convert that format into SG and share it with the corner 3. So in this way, where you are doing the export, where PEPAL is there, you don't need to send any document through email or a soft copy or hard copy. It can be passed through for corner. Okay. Now let's understand how this practically works because you have seen all this explanation, how the corner 1 to 2 and 5. So practically how it works. So let's understand. Before that, Bhakti has already talked about the data field, each and everything. Let me show you something called practical things, where these are the metadata when SNB team will do the impact assessment or gap assessment related to the IT or advisory part. This is the sheet where we are going to use. So on the screen, you can see this is the metadata which gives you the mandatory and conditional mandatory field. Okay. Now you all know about this 50 field, right? Everywhere people are talking about 50 field. That is related to the FTA part or VAT related part. Other than that, there is another field called Pint A format. That is also we need to identify. Okay. Second, validations. So today, most of the accounting or ERP system, they don't have a validations. They have a validation, but it is related to their business. Now, you have to take care of this type of validation also because if you are giving a wrong data, then corner 2 will reject the invoice because there is no validation is there. Okay. Now lookup tables, Bhakti has already explained to you. There are many lookup tables. You can see the list completely here. Now here, the main thing I wanted to tell you about this lookup table, if you have a choice in your accounting or ERP system at a master level data, you can customize all this field in your accounting or AP system, which will be a very huge job. And also, if any changes coming from the FTA, you have to rework on your ERP side. Instead of that, what we are offering a solution, you don't do customization in your ERP system. You tell us what you are calling. For example, in SAP, when you generate a tax invoice in SD module, you use VF01. So you tell us what you are calling in SAP. We will map it as a 388 in our transformation or in middleware. In this way, there is a less development at ERP level and we will take care of these things. Okay. Now, right now, what I am going to show you, I am going to show you a product demo where seller is sending the invoice to the corner 2 and how this corner 2 to 5 and 3 is getting delivered. Then second, I will log in to the buyer and how this buyer will receive the invoice. Okay. Now, before that, consider this is what a invoice coming from your accounting system or ERP system. You can provide the data in Excel, XML, JSON, any format. Now I'm just changing this invoice number to 29. Okay, and then this is the platform what we have to keep. Okay, as a data residency, all the data storage, everything will be there in all the data residency will be there in a UAE. So no data stored outside of the UAE. Okay. We have a single sign concept or we will create a username password for you. Now, who is going to use this platform? Okay, that also I will tell you. So we have a two-factor authentication, a secret question plus OTP base. Both the options are there. Now, before that, let me talk about this API. So typically what happens, companies who are using ERP system, okay, global ERP systems where they want an API. So what is their intention is my business user is not going to use a functionality or any portal outside of my ERP. I want my business user do everything within my ERP system. For that, we are providing this API. Okay, this API will be the backend and your user will just do the current operational, how they are currently preparing the invoice. Similarly, they will do it and fulfill all their AR and EP side automation. They are not going to use any outside portal. Okay, for that type of customers, we are providing API. Now, who is going to use this portal? The portal will be used by the companies who want a reconciliation, who want finance people, IT people, operation people, sales people. They want a reporting, reconciliation, data storage, or they want a manual Excel upload. Okay, so somebody is doing API integration, their business user will use their ERP, and this portal will be used for the reporting purpose, reconciliation purpose. Let's understand how it happens. So here we have a workflow management. We can create a user roles and roles and permission. Then we have integrations. Some ERP support API. Some ERP they say I don't have an API integration available. I can go with the FTP also. Okay. Now here you have a tenant subtenant concept. Typically, what happens? If you have a group of companies, okay, under a VAT group, you have a legal entities. And under each legal entities, you have a TRN number, individual CT TRN number. Now, tenant is a group and subtenant is a multiple TRN number. Under that also, if you have a physical location, branches, that will be the subtenant. Suppose you are doing a business in Saudi, in India, in Bahrain or any other country where e-invoicing is there. So that will be the subtenant. Now, what is the advantage? The advantage is at a group CFO level, if they want to check compliances of all the things, that can be done on a single sign. Okay. Now, here we have a two app. One is called account receivable, second is called accounts payable. Okay. When you click here, you will see left hand side whatever data you stored, and right hand side you will see a complete detail. Now, as you know that in VAT rule also you have to archive the data. Typically, how people are archiving the data, they are just storing the data in a hard disk or a physical copy like a printout. But in e-invoicing, what is basically archival for 5 to 7 years? Now, any given point of time, if auditor comes and they wanted to see a specific invoice because they thought some invoice may have some problem, okay, they will ask you, okay, this year, this month, this date, I wanted to see these invoices. So here we provide that type of facility where any given point of time, if auditor asks you any invoice number in a 2 minutes, you can give these things under this. Now, other than this, who is going to use our platform? Company who got a very less volume, they say, I don't want any integration software. I want a simple platform where I can manually enter the data and generate the invoice, where they have a 4 to 5 invoices in a month. Okay. Some company, they will say, I am doing the monthly billing. I want to upload the data in Excel, JSON in a bulk manner. That you can do it. Now, to just go show you the complete process flow, what I am going to do, I am going to upload this particular invoice on my platform here. So consider the flow like this. Once you generate a e-invoice, okay, or normal invoice in your ERP, after that data will come immediately to my system like this. So here I am initiating the process. Okay, so here you can see 209. So this is the 229 invoice number. Okay, now suppose you are uploading the data in Excel sheet, okay, because you are doing the monthly billing and you want a maker checker concept or reviewer concept that somebody will upload the data, somebody will validate the data, somebody will approve the data. After that only I can push it to the corner 5 and corner 3. Then we have a workflow. Okay. Now I have done this. A Blue Harbor Logistic is my seller. I have sell it to the 37 INC. Now, what is the things you need to understand? First of all, here there is a concept called UUID. Now, all the ASP has to generate a unique UUID number for each document. Okay, status is success. This is the pinned AE XML format. This XML I have posted to the C5 and C3. Okay. Now you can see the response. C3 response code AB accepted successfully. Similarly, C5, because we don't have that production access, so C5 is blank. Once we get it, you will get a response from C3 and C5. So as a finance guys, as a ERP, what you need back in your ERP for the audit purpose. Two things. One, the response that C5 and C3 accepted, and second, this UUID. Okay. Now consider one of your customer is insisting that I want PDF copy. Ideally speaking, you don't need to share the PDF copy, but initially, because not all the people are not under the e-invoicing, and then they will ask the PDF copy. Okay. Now, if you give a current PDF copy, how today tax invoice you are sharing, if you give it to them, whether they will believe on you, because there is no change, right? How they will believe on you that, okay, this PDF copy is e-invoice copy. Okay. So what is our suggestion? Okay. What is our suggestion? So what we are recommending as a SNB, you should have this particularly table under your current PDF copy, what you are generating currently, where you can say that C3 and C5 accepted. Okay, that is point number one. Second, you can see the attachment here. When you click here, this is the XML, which is called print AE, what we have posted to the FTA and a buyer is. If you can attach this, because your buyer has already received this particular things in his from his ASP, right? So looking at this, you will get some compliances weightage that okay, this is a not a fake invoice, it's a genuine invoice and it is compliant invoice. Okay, so in this way, you can basically give the invoice to a customer in a PDF file. Okay, now this is how your AR process will work. Okay, let's understand how this 37 INC will receive the invoice, because from Blue Harbor seller, I have sent it to 37 INC. So let's log into 37 INC and see how he will get a AP invoice, because for 37 INC is an AP invoice. So I am logging to another browser. Now, as you know that you can automate your AP invoice, because whenever this particularly ASP, like because you are a seller also, you are a buyer also, and if you selected SNB as a ASP, it means whatever the vendor yours they issue the invoices, it is always coming to the SNB. Then SMB can give you the output as a AP invoice. There is a two choice. One, they can directly post the data to the ERP, or you can basically download it. Okay, so this AP automation, if you are not doing today, tomorrow you have to do, because after 2 years, nobody will issue the PDF copy. So you need an automation. So that also you need to think. Now, understand how this particular buyer, he will come to know when my vendor has issued the invoices. Today, he is sending the email, he is sending the hard copy, right? So what SNB is providing the option, whenever your vendor issue the invoices, SNB will send an email to your purchase team saying that you received one AP invoice. Okay. Now, what I am going to do, I am going to show you this. Okay. So here, this is my accounts payable. When I'm clicking here, left hand side, I will see a invoice. You can see 29 invoice. When I click here, okay, when I click here, you will see my Blue Harbor Logistic 3596. Here 37 INC, Blue Harbor Logistics 3596. So what I did as a buyer, if I am taking this AP invoice, I am getting this. Okay, now here you can see a webhook concept. So webhook concept means whenever I receive the response, I can directly send it to the buyer here. So that also you can do it, or I will send an email default. Your procurement manager, they can simply come here and download the daily invoices here, or we can push it to their FTP server. So functionality is available. If you don't want to automate, you can do it like this. This particular AP invoice is a complete data with the optional, mandatory and conditional mandatory. Now, from the perspective from the FTA side, corner 5, the corner 3 and 5 will not reject the invoice. It means they will only validate mandatory and conditional mandatory data, right? And structural data. But consider you have some business terms, like your procurement and finance say, I want to reject this AP invoice because purchase order number is wrong, bank detail is right, whatever parameter you want to reject it. That can be also possible in corner 4 model. That SNB can provide you. Plus, if you want to give some payment related advice to them, that can be done. So if you think only on a e-invoicing per se, I can provide you that type of solution. If you think I want to automate my EP and AR process in terms of exchanging the document, that can be also part of the solutions. Okay, so in this way, your AP and AR will be managed in a single platform. Okay, now here, understand from the group management point of view. So you have a group company, under that you have multiple legal entities. Now, if individual legal entity wanted to see his dashboard, okay, or his reporting, I can configure the rules and permission company wise. But understand a group CFO, group CIO, management team, they wanted to see the reports of all the company. Okay, they wanted to see a AR side and AP side. So let's understand the AR side. So in AR side, they wanted to see whether my company is fully compliant, whether there is a problem of a reporting, whether I am fully compliant or not. That can be checked in a central dashboard. And for individual level finance IT team, you can have a separate dashboard. Now, what this dashboard say? Here, invoice posted. What is invoice posted? From your ERP to SNB, you have successfully posted invoice. Invoice cleared means from C2 to C3 and C5, everything is accepted. Failed. Failed means out of C3 and C5, somebody has rejected. Now, even Prakriti told about the VAT payment. So here, total tax payable amount monthly. That amount report you will directly get it from the system. Here, transaction status means it is in transit, it is accepted, rejected, in process. Plus, as Prakriti told, for every tax invoice, you have to pass a credit note. Okay, now how many credit note against the invoice you pass, and here you have to give original invoice number. So that particular things we are giving. We are adding more functionality and reports here. Second, AP side. What AP side? I will get a report. So first AP side report is input tax credit. What is my input tax credit? That report monthly you will get it. And what are the documents I am receiving, whether credit note, RCM, sell bill invoice, purchase invoice, that document types you will get it. Okay, so this is basically the overall solutions. Typically today when we talk about these solutions, here the IT impact assessment, advisory impact assessments, plus providing the technology solution, all are the scope of our things. So this is all about from my side. So Prakriti and Bhakti.
Thank you, Mr. Praveen, for taking us through this. So now I will share and talk about the readiness assessment, implementation, what we need to carry out. Yeah. So in terms of readiness assessment, the Pragati has already talked about the applicability and the framework, how it was going to be in the UAE, and Bhakti also talked about the data points, and Mr. Praveen covered about the structure of the PayPal system, how it will look like, and with the demo we understand more in detail. So just to again, to see what are those stages and what are those journey which we have to go through to implement the e-invoicing. The first is as part of in the left side, you can see it is about the implementation. Before the implementation, we need to understand the assessment of applicability. And as I can see, certain queries which has been raised on the chat box also pertaining to the applicability, that since this e-invoicing is applicable for business to business and business to government transactions, that means those which are have a registered entity presence in the UAE or anywhere outside. Wherever you deal with the registered entity, then you have this applicability. Now, when it comes to business to consumer, so business to consumer could be your retailers or your real estate business where you are dealing with the residential individual tenants, or it could be schools which are dealing to the parents and billing to them, or any transport who are dealing with the individuals. Now those are basically we categorize as business to consumer, as they might not be registered entities. Okay, now for those scenarios e-invoicing won't be applicable. But for the VAT perspective, they would be still applicable because VAT is being still charged through e-invoicing. That will not be generated. The invoices will not be generated through that. But VAT invoicing still be done through the normal channel what we are currently using in the accounting system. But to say now, certain question which has been put up is that now we are a retailer. Do we still go for appointing an ASP? Do we still go for having that system in built for the e-invoicing, because our business is primarily with business to consumer? But yes, there could be few transactions which could be or in between B2B. So 90% or more than 90% of your transactions is business to consumer to retailers, but 5% or 10% could be business to business. With the current structure or the framework or the clarifications as far has been issued by the tax authorities, you still have to register if you cross the threshold of 50 million. Okay, but your invoicing will be only done for business to business or business to government through the e-invoicing mode. Whereas, while for other transactions, you need not do that. For direct consumer billing, you need not do the e-invoicing platform, but for others, it would be required to do. Now, another clarification which I want to bring in with respect to the applicability, as I mentioned that e-invoicing is applicable even for without a VAT or out of scope VAT transaction. Suppose you have a transaction from a third port shipment that is originating from Saudi to Singapore or anywhere outside UAE, though for VAT purpose it is out of scope. But for the e-invoicing purpose, it would be still under this model. So you still have to use the e-invoicing platform to execute that particular transaction. And what Bhakti has listed down as different scenarios of businesses, which has to be assessed to identify what are those data fields required. So the second part, as we talk about, is evaluating your current system and the processes to see what data are currently being captured in the system, identify those 16 use cases of e-invoicing, where it also include the commercial invoice, which where we need to see what are those data fields. That means commercial invoice, where like for third port shipment, you might not be having a VAT transaction or tax transaction in that particular invoice. So that becomes a normal commercial invoice that has still to be routed through the e-invoicing platform, and those data fields need to assess whether what are those mandatory data fields or optional data fields or conditional data fields which you need to define in the system. And out of those 50 which was identified earlier, there are 15 which are not being currently captured. So you need to see what are those transactions in your business which you have it, and what are those datas which would be required to be captured, like for RCM she was referring to, so where reverse charge mechanism you will have it. So you'll have to do a invoicing in the system and then label it as RCM. Those data need to be identified, which has to be captured in your customer master, in your vendor master. So that gap assessment has to be done before you go and identify and select an ASP. So as the timeline which Prakati mentioned that, we need to appoint mandatorily an ASP by July 2026 for the one who has a revenue more than 50 million. And for the one which has less than 50 million, they need to appoint by March 2027. So there is a timeline, but still, before you go and appoint an ASP as well, you need to do those reviewing your current systems, processes which are put in place, how, and it is a time where you need to see whether you want to upgrade your current system to facilitate that integration with the ASP and the way the data is flowing through. So one of the challenges which I will discuss later as well, that you cannot go and modify your invoice in the system no, as it is. Once the invoice has been created, if it flows through the invoicing platform of corner one, corner two, corner three, which Mr. Praveen was referring to, if that invoice has been issued through e-invoicing, you cannot go and just cancel or modify that invoice. You have to have a credit note created in the system, and then only you will able to modify, I mean, the amount which was issued earlier. So to that would no that will further add on to the operational delays of the businesses. So those scenarios need to be listed down, that what are those scenarios where you see in your businesses you will need to require to change the invoices. So you need to have that workflow created, that that would have adequate validation done internally before that invoice is generated to the e-invoicing platform. So those assessment study has to be done beforehand. And after you appoint an ASP, then you need to have that selection whether you want to go with an API mode of integration or a manual upload, or a batch processing, that need to be assessed. So that depend upon the volume of transactions which you have and the kind of system you have put in place, and then have those process flow defined in the system in terms of the approvals, the flow which should take place, and your operation team need to be involved in that. So they need to be made aware about it. What are those changes required? Because it is the operation team who pressurized to issue invoices, right? So they need to be made aware now with the changes coming in for the invoicing platform. The other internal processes which need to be followed before the invoice is released. And then, of course, once this validation process is done, the testing is done, then you primarily train your team members and then finally go for test runs and the final go live. So there are certain business transaction scenarios which I have listed down to see how the in the e-invoicing platform that transaction will flow. Now, in case of export of goods and services, so you being a supplier, you are based in UAE, you are supplying to maybe Saudi or any other region. So I mean, they might not be under the PayPal platform. Okay, so when you are generating an invoice, is only the UAE customer who are under the PayPal platform of UAE network, PIN data format. So, as a supplier, you would be raising an invoice through the e-invoicing platform, which is a corner one model, which goes through this, and then the ASP of yours, the C2, will validate your data and transmit that data. Tax data reporting is done to the FTA, that's C5. So there is no corner three or corner four because your customer is outside UAE. So the data would not flow to them. So for them, you would still send your normal invoice or PDF, what you are currently doing it. That would still continue to be sent through through a PDF format or email to be done because corner three and corner four are not sitting in UAE. Okay. Now, in case of import of services, an RCM, which is one of the scenarios of your e-invoicing use cases, where now in that scenario, you will have to generate that RCM invoice in your system, which is basically being a buyer in UAE. So that corner four, which is a buyer, you are a buyer in UAE, and that data will be validated by the corner three, the ASP, and that data will be transmitted to the FTA. So there is no supplier in UAE. So this is coming through an RCM, and as was mentioned, that we would need to have additional data fields to be created when you have an RCM based invoices generated in your system. So we need to identify what are those additional data fields and define that in the master level. Then comes to the self-invoicing. Now, that is also one of the use cases defined in the invoicing. Now, where you will have a self-invoicing primarily with respect to the commission brokerage when you give, and those are not a registered vendor or an agent, then you have to do a self-invoicing for yourself. Then in case of scrap purchases, the scrap dealers, which we have been identified recently as per the ministry decisions, and then some of the unregistered sellers which are doing, so for which you would be doing as a buyer, you have to create that self-invoicing. Then again, you will have to follow that C4 buyer validated by the ASP, tax reported to the FTA. But then additional part which has to be there is an agreement between the buyer and a supplier that the supplier is not generating an invoice. Okay, because there need to be a declaration given by the supplier that he is not generating the invoice because you are generating invoice as a buyer in your system, and then tax is getting reported through your system. Okay. And as I was mentioning with respect to the third port shipment, now in the third port shipment, the goods are not touching the port of UAE. It is outside the UAE. So now how does it happen in the e-invoicing structure, the platform? So you would basically what first you will buy it. Maybe you are buying it from Singapore. So your supplier is in Singapore. It is not coming to UAE. So in that scenario, what would happen that you would have a regular PDF invoice coming from them. Okay, it is not entering the UAE, so you'll account it as a regular invoice from the supplier in Singapore, and then you are raising an invoice to Saudi, though the goods is directly moving from Singapore to Saudi. So you would raise an invoice through your export of goods structure in the serial one, which I mentioned about it. So you being a supplier C1, you will generate an invoice validated by the ASP, and that ASP will do the tax data reporting to FTA, that is C5. So in the third post shipment also, though there is no procurement purchases being captured through the invoicing platform, but your outward invoicing to the Saudi will be generated through the e-invoicing platform validated by the ASP and communicated to the FTA. Now, in case of scenarios where you have domestic purchases of goods and services, as in the phase one, below 50 million, less than 50 million threshold, those vendors or your suppliers might not be registered in the e-invoicing platform. So, what would happen in that scenario? So, they will send you normal invoice as a PDF invoice. You need to account that invoice in your system, and then, but that is a vatable invoice. Okay, so portion of your information is going through e-invoicing platform to the FTA, and some portion of the information which is not through the invoicing platform is also no, you are reporting in your VAT return. So you need to do the reconciliation quarterly. Quarterly reconciliation has to be done because not all the information is going through the invoicing platform. Suppose if you are raising an invoice for 100,000, you are reporting it through the invoicing platform, and for that 100,000 you have an input which is could be like say 60,000 is an input, out of which 30,000 is through e-invoicing platform, and maybe another 30,000 is not through the e-invoicing platform. So because the supplier which is supplying to you is not registered in the e-invoicing because of the threshold, so in that scenario you need to do the reconciliation that what portion is going to the e-invoicing platform and what portion is outside the e-invoicing. Maybe that is something which you need to assess. How do you automate in your current system or the ERP structure? Because you cannot do it manually every quarterly return, that reconciliation. So it has to be done through the system, automatic flow. So as I was mentioning about some of the challenges in the flow, so now as the invoices cannot be cancelled, once the invoices has been raised from the system, you can only issue a credit note to knock off the amount of the original invoice, and that original invoice number to be mentioned on that credit note generated through the e-invoicing. Now this primarily, specifically in the case of project-based services, like for your project development or the real estate development projects where you have milestone based invoices, and that sometime it would happen that those milestone invoices need to be first validated, reviewed by the customer also for you to confirm as an invoice. So they might reject that invoice because of the commercial reason. Although everything has went through, you have captured all the data fields as per the e-invoicing structure, the platform, but still because of the commercial reason, the terms and conditions are not being met, the vendor, the customer might reject that invoice. So before you raise that invoice, that has to be validated to ensure that for any commercial reason that invoice will not be rejected. Because if that gets rejected, then you have to raise a credit note, and then the whole flow will take place, so which will delay the operation. So you need to identify scenarios and see what how do you minimize or mitigate those rejections in the e-invoicing structure. And also data field validation, because that data master data component in terms of having those your TRN number updated, address updated, and any other fields which are part of the mandatory fields on the invoicing, if that is not correctly updated in your customer master or vendor master, then it will get rejected. So that need to be updated on timely basis, and this will again delay the whole process of your invoicing cycle. And in case of multiple ERP system, primarily with respect to the retail business, you have multiple POS system, then you have accounting system, then the other operating system. So there could be multiple ERPs which we being used. So then integrating those ERP and the data flow, that need to be assessed, because that will have another challenge of complexities of different ERPs, how well they are integrated and how structured in terms of the data flow is taking place between those multiple ERP system. And then on the right side, we're talking about from the governance and compliance perspective, that the responsibility of overall implementation of invoicing is not only lies with the finance team or the tax team. it is primarily the operation team who has to be involved into it, and as well as the IT team, because they form the basic framework, I mean, the infrastructure they provide in terms of the ERP system and configuration on those changes that has to be built in. So they have to be involved at the initial stage of your assessment, and as I mentioned, that you might think the date of July 2026 or March 2027 is far off, but it's not that far off, I mean, because those assessment which need to be carried out to understand what are the business transactions. So start looking around, list out all the business transactions which you have in terms of your invoicing, the outward and as well as the inward from the account receivable side as well as accounts payable side. Identify the revenue streams, your expense streams, map those with the use cases of e-invoicing, identify what are those data fields which are required, and what is the current business structure of ERP which you have, and what is being currently captured, because you need to coordinate with your customer as well to get those data informations to be updated in your master. Similarly, from the vendor. So the whole will involve your operation team as well. They are the one who are frontline in communication with the customer or the vendor. So they need to be involved, the finance team, the IT team, everyone has to be engaged in the whole transformation journey. So you need to start now, act on it. And also, as I mentioned about reconciliation, because portion of data is coming through invoicing, portion is outside the invoicing structure, but those are still vatable transactions, right? Which is getting reported in your VAT return. So that reconciliation through the system has to be looked into it. And also in terms of archiving this data, I know that has to be archived for 5 to 7 years. So that you need to see, how robust, how kind of archival system you are able to build in. So overall, if you've seen the current challenges which you mentioned, as I mentioned about, we need to start early. You cannot be waiting for the timeline to approach, because the whole system, the business transaction need to be assessed. And then, of course, engage with the consultant who can document the whole operating processes, what you are currently following, the current as is, and what need to be changes to be done to align to the invoicing requirement. Then the training has to be given to your, I mean, accounts team, your operations team as well, and then the IT need to be involved into those changes to be built in. And then identifying the ASP. Yes, there are now 12 ASPs which are pre-approved in the as per the FTA Ministry of Finance list. But yes, I mean there would be more coming in. But before you go and actually go and select those ASPs, but the first and second step is very important to understand, assess the need, applicability, because that is the prima facie important basic fundamental to look at in your businesses. And then once the ASP is done, of course, they would take it up in terms of the data flow and the testing and the implementation. So the ASP will come in only when you have your internal readiness done, because they will be a technology partner who go and plug into your system, integrate with the system, and set up the whole structure and the communication validation with the FTA or the buyer ASP. So, but they are not the one who's going to assess whether in your businesses, well, your transactions apply to whether it is applying to e-invoicing structure or not, whether you have B2C or B2B or B2G. What are those different transactions? What are those use cases? So that a tax consultant has to assess, internal team has to look into it. What are those transaction scenarios and what are those data fields requirement? So that internal study has to be carried out and the impact has to be assessed. And then, of course, involving each and every team members to be part of this transformation journey. And so these are some of the clientels which Taxila has been doing about the e-invoicing implementation across different jurisdiction, Singapore, Malaysia, Saudi region, any other region. Previously, where PayPal system has been there in the Malaysia, Singapore, where they have been working upon and implemented with some of these clients. So just to summarize in terms of what we talked about today is that, okay, having an assessment done as part of your business study to look at what are those data fields requirement, what is the current business transaction scenarios which are there, build up those transaction scenarios, identify the gap, and then those information required. And then coordinate with the ERP system, understand the current structure or what is the process flow being done today, and how ready your ERP system is to integrate with an ASP. Okay, and then of course identifying those ASP, then identifying which method of integration required. Is it a API method or a batch basis or a manual process has to be done for integration? And then, of course, as part of the implementation, post implementation, we support also on the training and the SOPs, the governance documents to be there, for each of your team member to understand about it. So yeah, that's basically from our side. So we are open for the question answer session, and we can look at it on what has been captured in the chat box. So yeah, I mean, the first question which I read out is with respect to the applicability as business to consumers, like supermarket, school, fashion, department stores, transport, uh, companies, etc. They are going to invoice to the consumers directly. Will the invoicing applicable to them? As I mentioned, right now, even if you cross the threshold of 50 million, yes, the invoicing is applicable, but for the transactions of this B2C, you will not be raising the invoice through the e-invoicing platform. It will be a normal invoicing. But for other than that, if any transaction which you have B2B, like for schools, they might have education fees being billed to the parents. That is a B2C transaction. But in case they have, any facility of, I mean, basically sports facility or auditorium is given on rent to any companies, then that's a B2B for them. So they have to raise that invoice through the invoicing platform. Yeah, so I mean, the second question is similar to the one which we raised about the first one. The third question which I see is from Georgina. It talks about, can SME owner have their existing outsourced bookkeepers be an ASP? So no, it's not that, when you're outsourcing your accounting services to third party, he need to be an ASP. No, he need not be an ASP. ASP is a technology service provider for integrating your system, ERP system with the FTA and the buyer's ASP. So many yeah, bookkeepers can be any consultant which you are currently doing it, and he will be reporting as a B2B transactions as a accountant or a outsourced consultant, and he will apply his invoicing structure accordingly. Um, okay. So another question which I see with respect to, can you clarify which ERP can be integrated to for e-invoicing? Maybe Mr. Praveen, if you are there, yes, it is
Yes.
all the ERPs are available and can be integrated. Yes, Praveen, you can talk about this
Yeah,
one.
so we can integrate with any of the latest one or old versions or customs or global ERP. So typically we provide the four options. One, which is the API integrations, where we can expose our API and the ERP IT team or vendor can consume and do the API integration. Or sometimes some ERP they provide their API, we can consume. Now, if some of the ERP they are not capable of handling the API integration, we have a batch upload FTP. The third option is a manual Excel upload. So whether any type of accounting or ERP, we can provide the integration. Thanks.
Yeah. Okay. Thank you. So, I mean, so as to say that for all the ERPs, whether be in Tally or Zoho or Dynamics or, SAP or Oracle, every, ERP will be supported with this integration in either of the three methodology, which Mr. Praveen mentioned about it. Okay, so the next question which I see is pertaining to whether companies of for B2B, B2C companies, business to consumer companies, there may be transactions, there may be few transactions where they may have it for B2B as well. Like, maybe your 90% of your revenue is coming from the retail, and you might have few transactions which are coming to business. So suppose for 90% of your retail customers, you will be doing normal invoicing. It will not be through a e-invoicing platform. For your balance 10%, which is the corporate customers which you are dealing with, for them you will have to do the e-invoicing structure. Further, again, with respect to the B2C, if you're not registered for B2B, if okay, further for the B2C companies, if they are not registered for e-invoicing, how will they repurchase invoices from their suppliers? Okay, that's basically adding on to the queries which was raised, from the consumer side. Means you are billing to the retailers, but you would have a procurement. Maybe you are importing some items or you are procuring domestically. Okay, so those transactions still has to be done through e-invoicing platform of receiving. If you have a threshold more than 50 million, you register under that. And for your retail supply also, you will buy it from the supplier who, and that becomes a B2B transaction for procurement side of it. So it is applicable for both from the sale side of it and whether the procurement side of it. Another question which is there with respect to whether the PayPal ID is linked with your trade license or your TRN. So maybe Praveen or Prakati, you want to take it up on this?
Yeah, so it is linked to the TRN number. So as I told, it's more on a TRN number. It is registered with the MRR tax portal, and particularly this TRN is linked with the authorized service provider endpoint. Okay, and one more questions, Manishji, like further for B2C companies, if they are not registered for e-invoicing, how they will receive the purchase invoices from their supplier who might be registered for e-invoicing. So initially I told you that if you are not registered under invoicing or your customer is not registered in invoicing, it will be not send it to e-invoicing PayPal four corner model. How today you are receiving the physical copy or soft copy, like that only you will get it. So don't worry whether you are registered or you are not. You will get a copy from the vendor through physical copy or through PayPal four corner. Yeah, Manish.
Okay. Then another question, which is with respect to the out of scope transactions, do we need all customers' corporate documents, example tax certificates, and also that is basically as part of KYC documentation you would be required to do. But yes, when it is becoming an out of scope transaction, as listed by Bhakti with respect to those use cases of e-invoicing, if that falls under this, maybe that is something would require the data for tax certificate or whatever need to be captured as a mandatory field in your master database. So it would depend upon the transaction scenarios which would fall under the use cases. Now, if a company has only B2C sales but has B2B purchases, then do they need to appoint an ASP for purchases? Also confirm if the import services transactions, the buyer need to issue invoices for the same, like self invoicing. Okay, the first part is clear with respect to whether, as Mr. Praveen mentioned about it now, that when you have a B2C sales but also has B2B purchases, then yes, it depend upon the threshold you cross over and further guideline to be issued by the authorities, whether an ASP appointment becomes mandatory in that scenario if you only have B2C sales and but though you have B2B purchases. Uh, but with respect to the RCM transactions, yes, for the RCM import of services, you still that will be through. It is one of the use cases of e-invoicing. For the RCM, you will have to create an invoice in your system which would capture those data, and that's similar to like a self-invoicing to be done in your system.
Manishji, I just want to add that same question
Yes.
whether B2C sales and B2B purchase. So purchase side is a complementary. So e-invoicing is related to the AR side. Okay. So if you are exclusively doing the B2C sales, it means you don't need to register for a e-invoicing. Whether you are a purchase or not, that is different one. So in the question is asking you are into B2C and you are into a purchase B2B. So you don't need to appoint the ASP because you are coming under a exclusive B2C sales. For purchase, you don't need to select any of the ASP. Yeah, Manish.
Yeah. Then with respect to the transaction of export from free zone to a country outside UAE, whether it would be covered as a zero rated exempt supply and how e-invoicing would be done in that scenario. So now, as we mentioned about the applicability, those scenarios where whether it is a zero rated or it is an exempt supply, it would still be considered as part of the invoicing platform. When you are exporting it, whether from the mainland or from the free zone, it would still be required to follow because if your threshold, you're crossing the threshold of 50 million in the phase one, you need to register and do that. And because it is going to be a B2B transaction, it has to be done through the e-invoicing platform, irrespective of the VAT rate applicable to that particular transaction. Now, what about the invoices to be raised to the same VAT group, tax group? Okay, so now here the question is whether if now, as maybe Mr. Praveen, you can talk about the registration perspective, that how the registration of with the PayPal ID is done on the trade license perspective when they have multiple entities within the same tax group, but the trade license are separate. How the PayPal ID
think
registration is done
no,
and how the transaction will take place.
I think Manish, this is intercompany transactions. What question I think. So he's
Yeah,
asking about the
but see, when in case of intercompany, they would have a separate trade licenses,
yes, yes.
but they
So
are
they
forming a
have
same tax group, right? And for the e-invoicing purpose, you would go with the PayPal ID for each of those trade licenses,
so
right?
here if you have a tax working group, one
Yeah,
tax group under that you have a different city TRN number. Each
right.
TRN number will have a PayPal ID, and for intercompany transactions, you have to bill it using that.
Exactly. So,
Assalamu alaikum.
yeah, so with respect to the VAT reporting, you would you will be having one tax group return file it. So those transactions are getting knocked off within the VAT grouping. But when it comes to the e-invoicing structure, so you will still have to raise that invoice through that e-invoicing platform to your group entity because they are under this different PayPal ID registration. It is not a common PayPal ID registration for the group. It is for each trade license with respect to each trade licenses. Yeah, so I think we have addressed whatever the questions which can see, and now so thank you all. I think if you don't have any further questions, and we can you can drop your email ID or you can send us a query, whatever you have. These are the contact numbers mentioned on this screen, and we will get back to you on those queries. Thank you all for joining in today's session, and we will have this session recorded and we will share to your email IDs, whoever have registered with us.